Cathie Wood, star fund manager, business founder, and Tina Fey lookalike, said in a webinar that long-duration assets, such as tech stocks, which sold off hard over the last few months due to overblown inflation fears, should see a roaring comeback that will likely result in Ark Investment's portfolios more than tripling over the next 5 years. This rotation from tech into value and now back into tech, in her opinion, has greatly expanded and reinforced the bull market, averting another tech bubble and laying the groundwork for the next leg up in technology-based equities. Wood, who became the face of the enormous rally in technology stocks such as video conferencing platform Zoom and meme lord-led Tesla, said that falling lumber and copper prices signal that the market is beginning to see indications that the risks from inflation are exaggerated.
If you look through the details in the CPI report, a lot of the inflation is coming from transportation, hospitality and leisure. Again, these areas of the economy are just starting to open up, and they have some pricing power. They need to recoup some of the losses from the last year, and that's what's happening. We do not believe this is going to be sustained.
Lumber prices have dropped about 30% since their highs on May 7, while copper prices have dropped about 6% at the same time. She stated that the market for technology and innovation initiatives has been challenging. As a result, she has shifted her focus to opportunistic investing bets, such as companies that have lagged the S&P 500. Since the beginning of the year, inflation fears have weighed severely on growth companies, pushing investors to shift into value stocks in sectors like energy and financials that gain from higher prices and interest rates. Wood, whose Ark Innovation ETF was Morningstar's top-performing actively managed U.S. equities fund last year, is seeing her performance stagnate as growth stocks have slowed. Her flagship fund has lost roughly a quarter of its value since its early February high. Recently, Cathie Wood said she is unconcerned by the recent decrease in her funds and that the bull market is merely extending to incorporate other strategies such as value. The rash investor emphasized that her disruptive tactic would pay off in the long run, and she's taking advantage of the current sell-off. She believes that the market is currently spreading out and that the bull market is consolidating, which will favor her in the long run. Wood is in fact relieved that the tech sector took a break from rally because she believes the pause in momentum is constructive and will lead to a healthier rally in tech on the next move higher.
These cyclical sectors are setting up for a fall, and that should accrue to the benefit of innovation.
Wood oversees 5 ETFs focused on disruptive innovation that has raised more than $15 billion in capital from investors this year alone. Ark Innovation, Wood's flagship fund, returned about 150% in 2020 as the pandemic boosted innovation trends, and today has a net asset value of more than $17 billion. In 2021, however, the fund is down more than 11% due to recent weakness in technology equities, which has been exacerbated by rising inflation.
We believe, actually, that inflation will be and is being overstated.
During this sell-off, Wood said she is feeling increasingly positive about her holdings. Wood took advantage of recent tech weakness to buy the dip in a few of her ETF's top holdings. Tesla, Teladoc, Zoom Video, and Palantir are among the companies that Wood has purchased in large amounts. Recently, Ark Innovation also purchased shares in Square, Roku, Zillow, and Shopify. So, if Wood is correct in her analysis, means that we have reached peak inflation and deflation is the most likely outcome to the forecast, which is more beneficial for growth equities and technology-driven firms.